After leaving Goldman Sachs back in 2004, Mathieu Chabran co-founded Tikehau Capital. The alternative asset manager has 14 billion euros of assets under management and the backing of the former French Prime Minister François Fillon. Now, last month, the group opened a New York office, and yesterday, its first half earnings report saw a 7% increase in assets under management. Well, we're very pleased to say Tikehau Capital Chief Executive and co-founder Mathieu Chabran joins us now from Paris. Mr. Chabran, thank you for joining us. When you look at, the challenges for the asset management industry, I know you've also bought a smaller company to increase your footprint. Is consolidation the name of the game? Will you also go after other companies to buy?
Good morning, Francine. Thanks for having us. Effectively, we reported last night our first half results at close to 15 billion. And at the same time, we announced the acquisition of Sofidy, the leading independent real estate asset manager in France. And clearly, I don't know if the name of the game is consolidation, but it's clearly about being, a cross-asset platform when it comes to private assets in Europe. That's one thing that we've been doing ever since we started 15 years ago. And by hitting the 20 billion mark with this potential acquisition, we're certainly reaching a milestone to take the business further.
Mathieu Chabran, what's your take on Brexit? Do you still want to increase your presence in the UK despite Brexit?
That's actually a very good question, Francine. As it happened that we moved offices in London from a smaller office to a bigger office last week. London is our second largest office worldwide out of the 8 offices that Tikehau has today, and is still, a key center for us. We are not subject to any regulatory risk at this stage, having all our backbone effectively on the continent. But the London center remains key. Any global investors will stick to this gateway into Europe. So we remain committed to London, whatever the outcome might be.
Mr. Chabran, maybe private debt and private equity, the trend in the United States is finance through the private process. Will Europe see finance through an ever more private process? Can that happen with a regulatory tone of continental Europe?
Tom, as you know, the U.S. market has been disintermediated for some time, for maybe the past 30 years. You've got, very specific vehicles like the BDCs. Here in Europe, we don't have such a thing. The opportunity for private debt really emerged on the back of the crisis in 2008 and then in 2011 with a number of global players joining. And the opportunity has become very much structural. The regulation has effectively evolved, as you said. It becomes more punitive for banks, more punitive for insurance companies, and that's where credit asset managers, cross-asset managers like us have a great opportunity to finance the real economy in Europe. And as you know, Europe is a very fragmented market. The only thing we have, in common is a currency. So being local is key, and that goes back to Francine's question. It's key to be in London, but it's paramount, to be in every single market.
What can be the French distinction of this new capitalism versus Germany? What can Mr. Macron, what can France do to reassert a capitalism versus Germany?
Tom, I will tell you one thing. 2 years ago, when I was traveling to New York, I was carrying my London business card, believe it or not. For the past 12 months, and since Macron and the government came on board, they did one great thing, is that they restored trust and confidence, which is key effectively for global investors to keep on allocating into this market. So vis-à-vis Germany, there's been obviously a number of political factors across Europe. And at the time where effectively we need strong leadership, it appears, for the past 12 months now or so, that Mr. Macron has been doing a tremendous job.
Talking about Germany, Mr. Chabran, how satisfied are you with your partnership with Deutsche Bank's asset manager, DWS? Could you increase your stake in it?
Well, DWS effectively went public 6 months ago. Deutsche Bank remains a 75% shareholder. Nippon Life is a 5% shareholder. And at the time, we became a less than 3% shareholder with the view to effectively strengthen the partnership to access the German market. At Tikehau, we have no German presence. We have very limited German investors, and we saw that together with management as a strong way to effectively offer DWS increased access to private assets and to alternatives. And for us to get access to the German market, we are moving in a very satisfactory manner, with them. As to increasing our stake, there are no such a plan at the time.
Okay, going back to Brexit, what's your target for assets under management here in the UK?
So, for us, we do not really look at, where do the assets come from. What we have, we started in Paris 15 years ago. We still have a very strong domestic investor base. Our international investor base was 25% a year ago, but we just announced, this morning that it passed, the 33%. So we're really looking at that as effectively accessing, the US market, the Asian market, with this global investor base looking to increase their allocation to private assets. This is evidenced by a number of industry studies, the BCGs and other, and we clearly want to grab a market share of that.